Hello and welcome back. I hope you're excited for a great chapter on activity-based costing. Good news is that if you understood how to allocate overhead under a traditional job order costing system, activity-based costing is done in much the same way, except you have more cost pools and more drivers. So basically, all activity-based costing is going to do is require us to complete additional math calculations. So it's really not as bad as it may seem. So the first thing we're going to talk about is how is ABC costing different than traditional costing? Again, traditional costing is what we learned in chapters 2 and 3. So in ABC costing, non-manufacturing costs as well as manufacturing costs can be assigned to products. In traditional costing, only our manufacturing costs are assigned to products, which is DM, DL, and manufacturing overhead. That's direct materials, direct labor, and manufacturing overhead. All of those direct materials, direct labor, and manufacturing overhead costs are assigned to the product under traditional costing. Most, but not all of them, are assigned to products under ABC costing. And then in addition, some of the non-manufacturing costs, that's the selling and admin costs, are also traced to products under ABC, which is not allowed under traditional costing. So again, traditional costing allocates all the DM, DL, and MOH costs to the product, whereas ABC allocates most of those, but not all, and then also allocates some of the non-manufacturing costs. Why is that the case? Well, basically ABC is going to apply any costs that can be directly traced to the product in some way. So some non-manufacturing costs like shipping costs for the products would get allocated under ABC costing, because the goal of ABC costing is to allocate all costs associated with making and selling the product to the customer. ABC excludes organization sustaining costs and idle capacity costs from product cost. What does that mean? Well, organization sustaining costs would be costs associated with upper level administration. So that would be things like the CEO, CFO's salary, the accounting department, the human resources department. Those are all organization sustaining costs. IT department would be another example. Idle capacity costs would be if there's like some type of machine breakdown or disruption in the factory. Anytime employees are sitting around not actually making the product, that's considered idle capacity costs. ABC doesn't apply idle capacity costs to the product, because obviously when you're making the product, you have to be actually working on it. And idle capacity means you're not able to work on producing the product, so ABC excludes those costs. ABC is generally seen as a more accurate method for allocating costs to products, but it is more arduous of a task. For our purposes in the classroom, it's really not that bad. It just means some more math. But in the real world, figuring out how to allocate the various costs to different cost pools and figuring out the appropriate driver is what is difficult. In our world, the classroom, we're just going to give you the amounts that get allocated to each cost pool and the drivers, and all we have to do is the math. So another visual on how ABC differs from traditional costing. With traditional costing, a lot of times a company uses a plant-wide overhead rate. That's that one-size-fits-all approach we discussed in Chapter 2 and 3. And we can also modify traditional costing to get a little more accurate by using departmental overhead rates. So we have one-size-fits-all, but in each department. So that makes it slightly more accurate and a little more complex. ABC costing has the most number of cost pools, which increases its overall complexity. Of course, it's cost-benefit analysis. The more complexity, the more cost, but hopefully you get more benefits out of the cost information derived. So that's really what companies need to do when deciding whether to implement an ABC system, is to figure out if the additional cost of implementing such a system is outweighed by the benefits or not. If the benefits are higher, getting that better cost information is worth more than the additional cost of implementing the system, it makes sense to do so. With ABC, each cost pool has its own unique measure of activity. While under traditional cost system, it's that one-size-fits-all approach where we use direct labor hours, machine hours, or direct labor costs to allocate all overhead, even though that may not be the best driver for all of our different types of overhead costs. Direct labor and machine hours work correctly when changes in the quantity of the base are correlated with changes in the overhead costs. But obviously with fixed costs, it's not going to actually be any correlation because fixed costs stay the same no matter how many units you produce. However, under traditional costing, we kind of ignore that for simplicity and just allocate the fixed overhead cost with our volume measures, direct labor, and machine hours, and let it ride, hoping that the information is good enough. Relying exclusively on those types of drivers to assign our overhead costs has come under increased scrutiny because direct labor and overhead costs have been moving in the opposite directions. Why is that? Well, because we're moving more to automation, right? So there's a lot less direct labor in the products that are being produced due to automation. So using direct labor as a driver really doesn't seem to work anymore. Machine hours might be a little better, but again, machine hours aren't going to be the answer to all types of overhead costs. So under ABC costing, the goal is to provide more accurate information. And the way we can do that is by finding drivers that more accurately reflect what is creating these costs to be incurred in the first place. So now we're going to go over some key definitions that we're going to need to successfully implement an ABC system. An activity is any event that causes overhead to be consumed. So it's anything that's going to drive overhead costs. An activity cost pool is like a bucket where we allocate all like costs. So any cost that has a similar driver would be put into a separate bucket. It's kind of like what we did in traditional costing. If we used one predetermined overhead rate for the whole company, we shoved all the overhead cost into the giant overhead bucket. If we did it by department, we had a bucket for each department. And then in ABC costing, we take it up a notch and we have multiple buckets based on different activities that the company performs. The goal being that each bucket would have a driver that's highly correlated with the costs that are in it. The activity measure is that allocation base, that driver that is creating the overhead cost to be incurred. And again, under traditional costing, we may have one or two drivers, one for the company as a whole or a different driver for different departments. With ABC costing, we're going to have multiple activity buckets and multiple different drivers. The two most common types of activity measures are transaction drivers and duration drivers. Transaction drivers are a simple count of the number of times an activity occurs, like, for instance, the number of customer orders that are taken. So how many customer orders would be an example of a transaction driver. A duration driver is the amount of time needed for an activity. So instead of the amount of customer orders, it would be how long we spend on average with each customer order, or taking each customer order. Traditional cost systems rely exclusively on allocation bases that are driven by volume. Think about it. Machine hours, direct labor hours, and direct labor costs are all driven by volume. The more the company produces, the more of those allocation bases the company is going to consume. ABC defines 5 different types of activity levels, and mostly they don't relate to the volume of the units that are produced. These 5 levels of activity are unit level, batch level, product level, organization sustaining, and customer level. I like to view it as a pyramid where we have unit at the bottom, then batch, then product, then organization and customer at the top. The reason I like to view it in this way is because in order to identify what type of activity we're dealing with, we really need to start at the bottom of the pyramid and work our way up. So for example, let's assume we're baking cookies. If we're baking cookies, we make, say, chocolate chip and oatmeal raisin cookies as part of our business. If we're trying to think of the cost of chocolate chips and what type of activity that would be, we need to think in terms of unit, batch, product, organization, and customer level. So the way you do it is you ask yourself, if I make one less chocolate chip cookie, can I eliminate some of the cost of chocolate chips? And at first you might think no, but the reality is, yes, you can, because if you make one less cookie, you're going to need less chocolate chips overall. Let's assume there's 5 chocolate chips in a cookie. You make one less cookie, you need 5 less chips. So the cost of the direct material chocolate chips would be a unit level activity. However, if we were talking about cooking the cookies, if you imagine cooking the cookies, you do those on a tray. You put like 12 on a tray and put it in the oven. So the cost of cooking those cookies for 10 minutes in the oven, would that change if we make one less cookie? No, you put 11 cookies on the tray, you still got to cook it for the 10 minutes. What if we make one less batch of cookies? So we make one less tray worth of cookies. Well, then yes, the cost of the oven would change because we would be running the oven for 10 minutes less if we make one less batch. So that would be considered a batch level activity. What if we were advertising our cookies? So we're advertising chocolate chip cookies. If we make one less chocolate chip cookie, can we eliminate chocolate chip cookie advertising? No. If we make one less batch of chocolate chip cookies, can we eliminate chocolate chip cookie advertising? No. If we stop making chocolate chip cookies and focus only on oatmeal raisin, which I think is blasphemy, then could we eliminate the advertising for chocolate chip cookies? Yes. So then advertising for chocolate chip cookies would be a product level of activity. What about customer service costs? Well, if we make one less chocolate chip cookie, can we eliminate our customer service department? No. One less batch, can we eliminate customer service? No. One less product, get rid of chocolate chip cookies, can you get rid of all of your customer service for the whole company? No, you still need customers to take orders for, or customer service reps to take orders for the oatmeal raisin. So that would be a customer level of activity. Customer level is really easy. It's going to have the word customer right in it. What about the CEO salary? You stop making one chocolate chip cookie, can you get rid of the CEO? No. You make one less batch, can you get rid of the CEO? No. You stop making chocolate chip cookies, can you get rid of the CEO? You may want to, but no, the company continues. And then at the top, it ran out of room, it must be organization level, because the CEO isn't a customer service rep, so it doesn't have the word customer in it, it must be organization. So that's the way you got to kind of approach these if you're trying to classify the cost into various types of activity. Why do we do this? Well, we do it because unit level of activities are going to be driven by things related to producing units, whereas batch level of activities are going to be related to things that relate to making batches and so on. So the whole point of allocating our activities into these different types of levels is so we can then pair all of our like activities together with a driver that's going to be highly correlated with the activity costs. In order for ABC to work, because it is more of a pain, you're going to need strong top management support. If top management lets employees know how important ABC costing will be to the future of the company, then the employees will buy into it. It also has to be linked to how people are evaluated and rewarded. Think about this class. If I told you that exams didn't count towards your grade in this class, you would approach them a lot differently than you would because they do count. So because they're part of the way you're evaluated, you're going to study harder for them and you're going to take them more seriously. If ABC doesn't play a role in how management's evaluated, they're not going to take the process seriously at all. And then you need cross-functional teams. You need employees with knowledge of both the accounting side of the business as well as the design and manufacturing components to play nicely together on a team in order to figure out the best way to allocate costs and to determine the appropriate cost drivers. So to kind of demonstrate how an ABC system works, we're going to be using an example for Baxter Battery Company. And we have an income statement here which shows their product costs at the top and the period costs at the bottom. This is a traditional income statement. And Baxter makes two types of automobile batteries, the Sure Start, which is a standard battery, and the Long Life, which is their deluxe model. And they have their first loss ever. So management's trying to figure out, why does this loss exist? So Baxter Battery and the ABC team created the following activity cost pools and activity measures. This is really what's hard about ABC in the real world, is figuring out which activity cost pools exist and the appropriate driver for each pool. Because in the classroom, we can't really do that. We can't investigate and figure out what particular cost pools would make sense and what correlation they would have with activities. We're going to be given that information, which effectively makes ABC very easy for us to do. So they've identified 5 cost pools: customer order, design, order size, customer relations, and other. The other is basically any cost that has no correlation with anything, so we don't allocate it at all. If we can't come up with a good allocation base or driver to allocate the cost, we don't allocate it under ABC costing. We don't force it like we do in traditional costing. And you can see for customer orders, the activity measure does make sense. It seems to be correlated, the number of customer orders. Design changes, the number of design changes. Order size based on machine hours, because the bigger the order, the more machine hours it'll take. Customer relations, the number of active customers. So there's definitely a very correlated relationship between the cost that would be in the cost pool and the activity measure that we're going to use. So this slide basically runs through how management's going to determine which costs should go into each of these cost pools, basically explaining the types of costs that belong in each pool. For our purposes, we don't really need to be concerned too much with this, because we're just going to be given the information as to a percentage of total costs that go into each pool. And then we do the math in order to make it happen. So again, the hardest thing about ABC is not what we are going to do in the classroom. The hardest thing is figuring out which cost pools are appropriate, what the drivers should be for each of those pools, and how much cost gets allocated to each pool. That's really the hard part. We're going to be given the cost pools, we're going to be given the drivers, we're going to be given the percentage of costs allocated to each pool, so all we're going to need to do is the math. And that's what we'll begin to do as we move into Part 2 of this lecture series.